Hello, you're watching The Open on BNN Bloomberg. It's my last show, and so my only request was that I have Francis join me for the hour to help me through it. Francis Hordelsky, fan favorite. Thanks so much for joining us.
Thank you. Great to be here. A little sad, of course, but, you know, we always look forward. We don't look back. That's the way the world goes, and that's what you'll be doing, looking forward.
And you're surviving. You're on the outside. Look at you, dare I say, thriving.
I am surviving.
Okay.
But I have a few years on you, so.
Okay, we'll see. Let's talk the markets. Maybe let's just start with this Canadian job picture. It was fine, and it was not falling off a cliff, but still there's softness there.
Yeah, it's 15,000 jobs. I saw some of the data this morning. Youth employment was stronger. It was kind of I call it a mixed picture. In fact, I counted the number of times unchanged was used in the release 6 times. So there was a lot of unchanged, including the unemployment rate. I mean, we're just kind of chugging along. There's a lot of big picture dynamics that are going to affect the jobs picture over the next year, including the changing immigration status. And it'll be interesting to see how that flows. And, you know, the implications of whatever are the trade initiatives out of the United States. They're going to have an effect.
There's so many different factors that could affect interest rates. All of those are part of it. Then you've got this widening divide, it seems, between the path in Canada, the path in the U.S., and we'll talk about that in just a moment. And I wonder, you know, do you like these bond proxies here? Can you get a benefit in Canada's easing cycle relative to the U.S.?
So when people talk, I get a lot of emails all the time about, you know, so-called bond proxies, and I'm not sure if we're talking about the same thing. A lot of people are looking at the high dividend yielding stocks, like really high dividend yielding stocks, and you know the ones they are. Don't go to them. I mean, you know, Superior Plus was a kind of a prime example of that. I still stick with the, you know, a lower yield but a growing dividend is the better strategy. But having said all of that, I think people have sold U.S. bonds off, prices down, yields up, over the past month and a half, way too much. So on a trading basis, I think there's an opportunity.
And bonds are actually up this week,
they are. And so, so the 10-year has fallen 20, I'm looking at it right now, 22 basis points from the high. Might have been Monday, it might have been Tuesday morning. I'm not exactly sure where that high was at 4.5%. So yeah, they've come down. I've been kind of saying buy bonds all week. So hey, so there's an opportunity here. I think on a trading base. You know, the problem is there's, you know, 100 basis points difference between the yields on Canada's and the yield on U.S. Treasuries. But there's also some tax benefits if you want to buy a discount bond.
A discount bond.
In Canada.
In Canada. Yeah. Let's talk about the Fed decision. And I know you saw this, and I saw it, and I just want to play it for our viewers, this exchange between a reporter and Jerome Powell. Love it. Let's take a look.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
I'm going to aim to be as unbothered as Jerome Powell come Monday, but I think that's probably good. I mean, legally, I think he's standing.
He's on until 2026 when his term expires.
And probably at this point, you don't want the Fed saying, yeah, I'd consider it. You know, that would introduce a lot of instability.
Yes, number one. Number two, though, such a firm no. I can't imagine that endeared him to President-elect Trump. President-elect Trump likes yes, yes, lots of yes. So I found that interesting. 2025 will be I don't even know how many times you can use interesting in a sentence, but 2025 is going to be an interesting year.
I think it's going to be
a year
too,
because there's going to be that pressure, you know, from the outside. Not that he's going to react to that pressure, but there will be pressure from the outside. He will ignore it, absolutely, but that pressure will be there.
Everything is up so much. Most things are up so much, and I think 2025 is going to be a year of assessment and deciding, should this and that be up that much? Should I be paying 24 times for the S&P 500? Should I be chasing gold at record highs?
So I did a review of what happened in the 4 years post his Trump's first term, from November 2016 to November 2020. The worst performing sector was energy. The best performing was tech, but tech's just, tech's tech. But I also found it interesting that GLD, which is the gold ETF, over that 4-year time frame, and it bobbled on the first couple of days of post the election, was up 75%. Gold was.
But that was during a pandemic. Like, remember
No,
the
this
world?
was from
November 2020. That's
yes, but it didn't happen in the 2 months or even in 2020. A lot of it was a nice slow appreciation. So, I know gold bobbled this week. It's come back. It came back yesterday. I think it's trading below 2,700 today. I don't count gold out.
What about the banks? Huge rally. I don't remember when I've seen Goldman Sachs move like that.
No. Well, they are looking at the opportunity. First, the yield curve steepened. That's a benefit to banks. Everybody's also looking at, M&A fees, and maybe somewhere in here IPO fees, which have been dead in the water. I'm not sure if that's not really a Trump trade. People have been waiting for that. But M&A, less regulation.
Could be if Lena Khan's out at the FTC. She's been unfriendly to deals.
Yeah, certainly on the M&A front.
Yeah.
I meant the IPO front.
The IPO,
People have been waiting for IPO fees for the last couple of years. They have not come through. Some of these banks were cheap. Certainly, but I think
those people, sorry to interrupt, but those people argue that that's why we're not near a top.
Oh, I know.
Yeah,
we haven't seen that massive influx of new supply. Just back to Khan, though, I did remember during the campaign, and I don't listen to a lot of what J.D. Vance said. Remember, the vice president doesn't have a lot of power. But we can go down that political line another time. But he did say something to the effect of, he thought she was doing a good job. So I don't know if he has how much of the ear he will have of President-elect Trump, but he did say that. I thought that was interesting. Nobody's talking about that right now. They're saying she's gone. I think she also has a year left in her tenure as the head. She will stay on as a commissioner.
All right. Thank you very much for those introductory conversations. Frances is not going anywhere. She's going to join me for the hour. And coming up next, we've got Ryan Dietrich of Carson Group. He's got a great chart that shows what happens when the Fed cuts rates at all-time highs.